Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with your closing grain and livestock comments for November 6, 2015. Corn market down to the tune of about 1.5 today. Soybeans up 3.5. Wheat market choppy at best, with Chicago down 3 to 4. The Kansas City and Minneapolis were firmer today, closing up those spreads a little bit. On the week, though, it was a down week for the grains. Nothing too dynamic, but an overall weaker tone to the week. Looking at some of the news and conditions, when you look at the corn market here as we work ahead, we continue to have the strong basis levels in the east. We'll see if that can't help us out in time. But right now, a lot of expectations for greater production out of USDA in the coming report, and also some potential cuts in export demand, and that's what's got a little weaker tone. We do look for this 358, 357 mark to continue to hold us as our lows, but a test of those or an approach of those maybe in the near-term future. We also would say by the new year, though, we'll be testing that 390 to higher price counts as we continue to consolidate within this range. Looking at the soybean complex, continued rain in Brazil here over the next 2 weeks keeps a little bit of a negative tone. We saw that in coffee as well today as these markets slip a bit with these more productive weather forecasts as we work ahead. The other dismal part this week was the export sales. The lack of Thursday's commitments and the lack of private sales is really keeping a negative tone around the market. The wheat market, on the other hand, trying to sort out some spread relationships. The Chicago has been gaining on Kansas City and Minneapolis. We saw that recover a little bit today, but a lot of ground left to go there. But don't expect anything too much there too quickly. We do have some quality issues from harvest in the east, and also lesser acres potentially going in versus the hard red belt. We've got good rains in winter wheat and El Nino forecasting to maybe keep that trend versus Chicago premium over Kansas City somewhat intact. So don't be surprised at that as we work ahead. The wheat market, though, we still look for targets up around 575, and we do think those are potential targets we will hit here in the next month and a half. But we'll need some catalysts overseas, and we'll see if we can't get those off of Ukraine, Russia, and Australia as we work ahead. Cattle market, big down week for feeders, down nearly $9 on the week. Lives down 4 to 5. We are weaker today for most of the day, but then came back on the close off of some 135 cash trade. We look for a choppy tone more or less to continue in a downtrending pattern. What that means is we'd look for the cattle market to get back up to 140 potentially as we work ahead off the December and February, but then break down progressively, working back towards those 128 lows and then potentially taking them out as we work ahead. So a downtrending pattern, use strength to commit your rally in marketing. Looking at the hog market, weak cutouts, weak cash, weak underlying tone to the market. I don't think we're going to go very much further than this 54, 53 mark off the December hogs, but it might be tough to get standing up right away again as we look to some of these weak cash tones as we work ahead here. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.